It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
You bet. So we got this question come in from Rex via email on the company. So Atlas Engineered Products, AEP on the TSX Venture, it currently trades at a price of about 93 cents and a market cap of about $53 million. So Atlas Engineered Products designs, manufactures, and sells engineered roof trusses, floor trusses, and wall panels. The company also distributes a range of various engineered wood products for use by builders of residential and commercial wood framed buildings. So the company's strategy is focused on profitability and organic revenue growth within its current markets and the pursuit of a roll-up acquisition strategy to consolidate similar companies operating in the truss and engineered wood products industry across Canada. So we can see here the company has made 7 acquisitions since going public in 2017, with the most recent acquisition on February 28th of 2022 when Atlas acquired High Tech, which was located on Vancouver Island, which manufactures roof trusses and sells engineered wood products. And the shares of High Tech were acquired for $5.8 million in cash, plus a working capital adjustment of about $500,000. And the land and buildings of High Tech were also acquired by the company for the appraised value of $3.25 million in cash. And Atlas financed the High Tech acquisition with a term loan for $5.8 million, as well as a mortgage for $2.4 million. So we do see that debt hitting the balance sheet. And during the 2021 fiscal year, High Tech earned revenues of just over $5 million, net income before taxes of just over $1 million, and normalized EBITDA of $1.25 million, with an EBITDA margin of about 25%. So looking at the recent financials over the last 8 quarters here, and specifically looking at the last quarter, revenue growth was relatively flat, coming in at $17.6 million. Adjusted EBITDA was $5.2 million, up 12.6% from $4.6 million in Q3 of 2021. And net income increased 12.1% to $3.1 million or 5 cents per share, compared to net income of $2.8 million or 5 cents per share for Q3 of 2021. And the increase in adjusted EBITDA and net earnings was primarily due to the increase in revenues, improvements in gross margin, and the new acquisition of High Tech. Looking at the balance sheet, they had about $12.9 million in cash, with $15.9 million in debt and leases, providing a net debt position of about $3 million. And the balance sheet is very healthy, with a net debt to EBITDA multiple well under 1 times. And right now we are seeing the company trade at about 6.2 times earnings, which is attractive. So moving on, as Ryan said, we did speak with management. We had a call with Hattie, the CEO who founded Atlas. And this call was just over a year ago in December of 2021. And something that Ryan has taught me to ask just kind of at the end of a lot of calls is, just an overhanging question. What can derail the story into 2022? Because we were in December of 2021 at the time. And he said, if developers shut the lights off and if interest rates increase above 4%, it would affect them. And he went on to say, money is so cheap right now. And considering when we had this call, interest rates were at just 0.3%, and look at where we've seen them go over 2022, above that 4%, which he kind of warned about. So to conclude, I like Atlas Engineered Products as a business, and the stock has done very well over the last 2 years. The CEO seems like a straight shooter. The company maintains a healthy balance sheet. It trades with low valuations and has been acquiring accretive businesses. But my overhanging fear with the story are the comments from the CEO during our call just over a year ago, when he said money was very cheap, and if interest rates go above 4%, it could potentially disrupt the business's growth. So with this potentially disrupting the growth path in the near term, we would remain on the sidelines at this moment in time.
It's an interesting company. It could be worth another call with the CEOs just to see what business looks like, or if there's been much of an effect. Because certainly, developers I don't think have turned off the lights, but then a lot of projects, they get started, well in advance, so you have to finish them. And I'd be interested to hear about his outlook going forward at this point.
Totally.
Yeah, for us, it would be a cyclical industry. Like they are in a cyclical industry. It does follow like building patterns. And with higher interest rates, is there the worry that you have a slowdown? And that's what he talked about. So, and it was hard to give guidance in that respect. So, for us, the earnings have been great. The valuations right now look good. There is some debt there that they've used to finance the acquisitions, which, again, and debt is more costly now than when, they originally started to make these acquisitions. So, the question is, can the growth by acquisition continue? Potentially, but can the growth in the market, is the end market, is there going to be organic growth in this type of environment? And those would be the questions that the next time we talk to the CEO, that's what we'll be talking about.